Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. Grains leaning mostly lower, except for a few soybean contracts over in the livestock futures. Cattle higher, hogs lower. And Scott, let's start off talking about this cattle market. Live cattle futures, nearby contracts actually closed to the plus side yesterday after a commodity-wide meltdown. So pretty impressive there. It looks like a very strong technical day, and we're adding on to that here today.
Yeah, thanks for having me, and definitely want to start talking about the cattle and not the grains necessarily.
Right, exactly. We'll start off with the good news first.
Yeah, good news first. So we've got some cash news that feels okay. There's been some 177 bids in the north, and those are being passed for the most part. And there are several producers that are going to stand on their heels and ask 180. They're gonna ask for higher prices. The South was going to try to ask for a couple higher and try to get to 172. That was the early expectations in the week. Hasn't been a lot of traction in the South. There's been a little bit of dipping from some northern regionals down into Kansas to try to maybe even that balance, find some cattle that are a little bit cheaper in Kansas to try to pull them north. So a little bit of an imbalance there as far as the north and the south, but that's going to help if they can dip down into the south and try to help those guys get the cash up. That's what's been holding the market back is the southern cash, and we're trying to stand firm and try to get higher prices. We know the leverage we have, so I think that's where we're at, and I think cash is going to stay a lot higher throughout the summer, where we've got tight numbers. The show lists are not overrun, and feeders continue to lead us to the upside here.
Yeah, we really like that when feeders are the leaders. We have more new contract highs that we're scoring in the pullback in corn. You know, does that provide a little bit more incentive for these feedlots who have to put some of those higher placements or higher price placements in the feedlot?
It has helped tremendously as far as feeder prices are concerned, because the buying the feed has been the toughest this last winter. You know, weather was probably almost second, even though we had a tough winter and pushing snow, but the finding some corn, some feed needs that were economically going to work for us, that was the toughest. You know, there was a lot of cow calf country spending 750 or 750 and higher for corn. Hay prices are high. So that was the big challenge, was these feed costs. And now that we see this large correction, these feeders can really start to get excited. They had a story by themselves just with the cow herd size and how shrunken that has become. Now that you see this feed seriously correct, and this is more of a for real break in the grains, not just its normal range trade as we break out, feeders are breaking out to the upside. To me, I think there's a lot more room left up on the feeders. We've got to rebuild this cow herd. So we've got rain happening here across cow calf country in the north, and the south has had some nice shots there. That's good. That's what we need. It could start to pull some of these heifers out of the feed yards and put them into the cow herd. Now, second thing is the cost of production has been so much higher, and that's been a big reason for the liquidation of the cow herd, the price of everything. Got somebody going to a retail store and spending $1,100 for 13 pieces of clothes. This is the last story I heard. I mean, the price of everything is going up. So to me, I think there has to be more incentive. If you're going to buy a bunch of bred heifers, bred cows to cab them out, I don't see a bunch of cowboys lined up saying, "Hey, sign me up. I'm ready. I love to work." So I think that we still have to find those people that say, "Hey, now this is enough money where I get 8% interest. I can make a purchase on some breads and really try to make some profits here." They're going to need to see that profit happening. So I think that there's a lot of room higher on these feeders. I'm trying to get people even used to possibly a $3 number on the feeder cattle market.
Wow. Well, we're closing in on 240 in those back months, so we'll see if we get there. What you just said, we should see those lower placements showing up in this cattle on feed report here on Friday, though. That'll give us confirmation of that, huh?
Yep. Cattle on feed report Friday. It seems like we haven't talked about this one near as much. I think some of the higher placements on the last report, there was some expectations that the estimate from that report was a little bit I guess too friendly, but we think going forward these reports are going to be friendly for us, going to be tighter numbers, and that
Right.
they're going to help us. But dissecting them by the number, I don't think we're all that worried about it. We can ask higher cash prices because we know the show lists are tight, we know the feeders are tight. We're going to be able to fall back on that, and I think shake off any kind of those bearish reports that we might have. They're a little off with the estimates. I don't think they're going to overhang on us too long.
So will cash wait until after the cattle on feed report to break here? That sometimes is the trend.
I could see that happening just because the Packers not getting anything bought. I thought, they probably thought 177 coming out quick by a major, a couple dollars higher than what some bids were. And some guys getting that live bid for the first time. They were only getting meat bids. And
Sure.
now there's live bids that they're actually, were desiring. So it didn't happen very easy. They didn't get any bought. So I could see them sitting on their hands. Now, something to be aware of as you do start to say, hey, I got a live bid now. Finally, I've been looking for live bids. Remember, you get into this calf crop and those yields could start to get better. And there might be a reason you're getting live bids because your yields are going to be pretty good. So kind of be aware of that change from meat bids to live bids. It'll be easier for you to get a live bid as we get into this calf crop into the summer.
All right, good point you make there. Hog market setting back again here today. It was a tough down day yesterday. Felt like we got caught up in the commodity wide selling, but also maybe some profit taking here, or is this maybe some profit taking in those cattle hog spreads, or what's the pressure from?
Yeah, I don't know anybody that's had profit in hogs, to be honest with you, is what it feels like. It's just
Okay, yeah, that's your point. Well taken there.
somebody's making profit. Yes, I get it. I understand. But there
Just
just
the
hasn't
funds.
been a sustained rally in that market, and it hasn't been able to turn the corner and officially will have a long-term rally to try to develop a trend. It seems like it can only do a day or two up, and then it's back to the downside, and we're going to go check out lows. So just still having pressure on that market. The only thing that I'm hearing that we have going is we have a positive cash basis happening right now with all of the volatility in the hogs and the rest of the markets. So that's kind of a rarity to have, that you're getting higher cash than what the futures are. So there's one little positive note on it there, but we are getting some weaker China economic news, and maybe that's part of like you say, getting caught up in what's happening in the rest of the markets. That's something that could affect it to the downside.
Okay. And we left the worst for last, which has been this grain market. The funds have been relentless sellers there. Let's talk about all of the negative things that have pressed that market, because you really can't buy any bullish news right now. And exports this morning certainly didn't help with that.
Yeah, we are having some trouble finding bullish news for sure, and it's been a breakout to the downside here. But to start to highlight some of them, just to kind of run them down, we've got the strong dollar happening, and it already was strong, and now you get the weak China economic news. It's just kind of keeping that strength to the U.S. dollar. China has canceled some of their corn purchases here as of late, so that's not helping as well. So our imports are really struggling in that sector. You've got a Brazil, South America crop that's been talked about. It's got some size to it, so that's starting to find its way into the markets, not helping us at all. And then we got our acres are planted. The planting delays went away very quickly, and we were able to get some big acres planted, and then we got rain on it on top of it. So we're getting a nice moisture shift. It seems like the El Nino shift is happening fairly quick here. It can be a little bit erratic, but the long term looks like we were probably planning on a longer term shift, and it happened a little earlier that we got this much rain early. So all of those just weighing against it here, and the energy price is lower.
Right.
It's been tough to try to find something. You got regional strong basis. That's the last thing we're standing on. And if you're looking for an opportunity to sell small crop corn, that basis can narrow up, and expect over time that it probably will. So wanting to take advantage of that while it's still here.
So we have taken out a lot of major support areas in corn and beans, both on old and new crops. So how much farther are the funds going to push this thing, do you think?
The last time we had 2.2 billion bushel ending stock numbers expected on some of these corns, we did not hold in the fours. So it was in the threes, and I'm a little bit worried about that. Yes, below cost of production levels by a ways, But when we look at some of the numbers that we're stacked up against, that's where the market can go. So I would love to say, yes, we could settle at 450 in the long run and kind of get used to that number, a little bit more firmer floor, but funds aren't going to look at it that way. They're going to look at where we have been on some of these other markets. So still worried about some more of the downside here.
Seems a little early for this when we don't have the crop in the bin yet. So hopefully we
Yeah,
can find some
great point.
stabilization.
Yeah, it is very early. Yeah, we don't know what's going to happen. It's not going to rain somewhere and it's going to rain too much somewhere. So we have all that to go through yet.
All right. Well, thanks for joining us as always, Scott Varilek with Kooima Kooima Varilek. That's markets now.